Now we're recording. So, for those that are just joining, we're going to be talking about draws of liquidity and how not to be married to it once you've identified your ideal draw. So, when we start our day, ideally we want to find the highest probable draw that is most likely to be purged or pursued. Now, this is ideally how I start my day. You know, you guys see me. This is the running joke that I always wake up late or that I'm always sleeping right before the market, because that's true. The moment I start streaming is literally the moment I woke up like a minute ago. But how am I able to identify the draw of liquidity so fast and most occasions correctly? Well, the first answer to that is obviously experience. I've done this so many times already, but the main one is always look at your high time frames. Similar to how we've been talking about for past couple of weeks, the high time frame is your aim, right? We're going to use the bow analogy because I think that's the best one for it. When you aim your bow, you basically put yourself on which direction your shot is going to go. High time frame is essentially the aim of that. So you want to rely essentially on identifying what the high time frame candle is most likely going to do. Is it going to go up? Is it going to go down? Now you can start it basically from the daily to the hourly, right? I started my day looking at the daily. I saw that the daily was deep into this fair value gap. I perceived that through that daily candle, the 29th candle, we were going to push higher and possibly expand even greater to the upside, because we hit a very deep lower area of the fair value gap. That's all the information that gave me. The possibility of pushing higher. Then you want to use your hourlies for that extra confluence. What was my confluence in the 4-hour time frame? Well, we've been expanding quite heavily throughout Asia and London. It must be because there's some sort of unfinished business that we have up here, possibly to make a market structure shift or to simply take out a buy-side liquidity, which was right here. Then you look at your hourly as another confluence as well. We can see the price was completely trending up higher. 7 a.m. hits, retraces, tries to expand once more. Then 9 a.m. hits, it retraces once more at 10 to try and expand higher once more. So the hourly are telling me from the information that we have right ahead, the price wants to go up. How up? That's unknown. It's just telling me the direction. Similarly to where you aim your bow. Just because you're aiming the bow doesn't mean you're going to shoot, doesn't mean you're going to fire anything. You just have the direction where it's ideally going to be headed. That's when you start using all the other time frames to identify the probability of if it's going to hit or not. But this is ideally how you start your, let's say, draft, right? Your raw draft of where price is headed and why. So I do this, I see it, okay, it's most likely going up. Now I want to see things to justify it going up. In the 15-minute time frame, similarly, you identify any PDRA that confluences with it. Right here, right at 10:15, we had a 15-minute fair value gap that we were traced into. We respected. Even deeper down, you could say that, okay, what about the 5-minute structure? Here we had a 5-minute order block that also respected. So now we have multiple things right there suggesting that price may try to go even higher. Okay, 1-minute time frame. So the 5-minute and the 15-minute is our arrow. It's telling us that it definitely has the potential to go higher. All that's left is the trigger that releases to let price definitely go towards that point. Now, similarly to how we've been talking about the 2022 model framework, let's go over the 1-minute trigger for the direction of price. And we just go in S at the very same time frame. This was 1022. Yeah, this was around here. So price taps the PDRA, fails to displace lower, but it takes out this low as it pushes down. S does no such thing. S never takes out any low. We took out the low of 950.42. S never touched the low. It ended up respecting bullish structure, no new low. So no divergence. We have an SMT between Nasdaq and S. Right after, we're in a spot where price can definitely sell off to the downside, but we see that become invalidated with how price inversed all of the SIBIs that it had, and how it displaced higher after making a shift, or better said, a breaker. Not a breaker, I mean a break of structure. So all of this is telling us, okay, price is disrespecting bearish structure. It looks like this is the ignition to send price all the way up to the buy side liquidity that we have above in the 4-hour time frame. That's our bias. Now, with all of that, we get our reasoning, our justification of why we should take the trade, and you simply take the shot. Now, what comes next? Let's say we hit it, we hit it here, but let's say we didn't hit it. For some reason, it got so close, similarly to how it got close right here. And then it dropped. It failed. Okay. Ended up making bearish structure, then ended up making bullish structure again. Right here, you could say that we had a 2022 model. There was the stop rate. There was a shift. Retracement. You enter longs again. One more try. Failed again. Did not take out the external liquidity that you're aiming for. It's not completing your bias. It's not completing your idea. It seems to be struggling each time. You're still bullish bias. Price comes down right here. You're not invalidated technically, but you're still looking for those longs. This is why it's important to always keep in mind the tier of the setup, right? If we compare everything, all the information that we have previously, longs still look good. But what is the difference between entering a long here and trying to force a long here? The difference is the market structure in the 1 minute time frame. Here it doesn't look like price is trying to displace yet. It looks like it's struggling to even push up, but it's consistently chopping sideways in the range that it has in the 1 minute time frame. Here it looks like it's aiming towards something. So ideally, when price has those firm displacements, that's a little clue to where it wants to ideally head towards. Especially if after it displaces, it doesn't wick. Because if it wicks, then you could say, oh, maybe it's manipulation, for sure. But in this case, this is just sideways price action, so no reason to even bother looking long. Maybe around here, we went long, possibly, for sure, in one of these busies after it started to expand, but it failed once more. When price fails to take out a liquidity, or when price fails to expand in your setup, it's usually a clue. It's a clue that there is something it's waiting for. Now, sometimes we can't avoid it. It's nasty price action for sure. Choppiness happens. But the clue is that it has unfinished business in other areas that makes it not want to take that out first. It is important to always know that everything's going to be fractal, right? The 1 minute is going to ignite the moves for the 5 and 15 minute. The 5 and 15 minute models are going to create the displacement or distribution of the hourly candles. Similarly to how the hourly candles are going to create the direction, so that the mid time frame creates the structure to go to one area and the small time frame creates the ignition to start the move. Since it's all fractal, when you have your bias, you want everything to be in sync towards that bias. You start to notice that something is not in sync, it's most often because there's something that it wants to do first before presenting that idea that you have in your head. And this is why, ideally, you want to kind of be like water and adapt to the scenarios that are developing right before you. When we started the day, I was definitely looking for the longs, but I had opened the idea, okay, if price failed, I was going to look for shorts as well. Because similar to, let's imagine actually yesterday we played both sides, right? Yesterday, I had my bearish bias. I thought price was going to go lower. I was looking for shorts, but we were wrong on the very first trade of the day because price simply did not want to go higher yet. Let me see where was that? I think it was, I don't even remember, but I know maybe it was yesterday, maybe it was the day before, but anyways, it was one of those trades that, it was this one right here, right? We entered short here. I had my bearish bias. I knew the draw was going to be the sell side liquidity, but price was simply not expanding. It was not delivering the outcome I was wanting, which meant that it had other intentions first. what was going differently in the 1 minute time frame? If I wanted to go short, I want to see the 1 minute time frame doing certain things in price movement. If it's not doing so, then I have to be ready to maneuver my way out of the position and wait for more data to see what structure wants to do. This is when we flipped, we went long. The moment it hit that area, we flipped again, we went short, because it was confluencing with my bias, but also it was giving me the confirmation that it was finally time to go short. This is why ideally you want to be able to maneuver around, and you want to be able to use all of the time frames as confluence, and if something acts differently or odd, or something happens that's not supposed to happen towards your bias, ideally you want to be not married or not forcing the trade. You want to be able to just take a paper cut, as long as it's not the invalidation of your idea, of course, because if we look at it from the perception of here, I had an invalidation point here, right? My invalidation point was pretty much if price closed above this, because logically if price closed above that meant it was going higher. My invalidation point for my potential bias was if price closed above this, because if it closed above that, then it definitely is going higher, but it didn't. It respected, it broke the bullish structure, gave me the green light again, you pursue. If we go here to today, let's say you still have the bullish bias and everything. At this point, it's telling you consistently that it continues to fail to expand towards the draw of liquidity that you wish, and every time it makes that rough, hard sell-off again and again and again. So if you're noticing that's failing to expand, it's probably because it most definitely has unfinished business below. What that business could be, you don't necessarily know if it's internal or external liquidity yet until structure develops. But the moment that a large displacement happens and structure starts to develop, that's when you gotta kind of, look for the clues that price is giving you. So I would have said, or if I was still trading actually and I had my bullish bias, I think I would have kept trading until I got a wrong trade. What would have probably been the trade that would have been wrong for me? Probably this drop right here. Assuming, right, that I'm long, at any point this would either stop me out break even or it would have stopped me out period. So after the drop, let's see what price action started doing. If you look at the 5-minute time frame, the very moment that price dropped like that, let's see how it looked. Okay, we displaced taking out this low. That's our shift. In fact, we ended up making a 2022 model right there. Rated a high, made a shift. Now, imagining right that I still have my bullish bias, I'm seeing mid-time frame structure telling me something else. Despite that the hourlies are making me seem like, oh, we're going to go for all of these highs, that this liquidity that we obviously generated, because it's obvious what they're doing here. They're generating liquidity here to be pursued. How do I know when it's going to take it? You don't until structure or data shows you it's going to take it. In this case, this is telling me that there's a break of structure, price wants to potentially go lower. If I look at the 15-minute time frame as well, no necessarily shifts, but you can definitely see a CISD happening in the 15-minute time frame, giving you clues as well. So if I have all of that data starting to develop telling me that price definitely wants to go short, then ideally you want to maneuver and identify what could be the reasoning why. Well, let's see. Let's look at the hourly time frame. What's the justification to why price could potentially stop here and stop going higher? Well, we've been expanding since Asia. We've been expanding since London. We have, you could say, literally a 4-hour fair value gap right here. So it would make sense that price would want to come into deep discount, or at least discount first, before expanding higher again to go for your bias. So if I know that that's a possibility, I want to maneuver accordingly to that as well. So once we start getting that bearish 5-minute structure and 15-minute structure, you look for something that justifies the short trade against what you thought was your draw, as long as it consistently makes sense. Try not to get too trapped in weaves here, but so essentially you see that there's constant bearish 1-minute structure. The moment that mid-time frame and 1-minute time, mid-time frame and small time frame starts to tell you that there is structure against your bias, that just means you gotta stay away. You can't really touch this unless your bias is invalidated, or unless you have a bigger plan, like let's say you're going to wait for price to come all the way down here first. But if you try to force a long just based on your bias, but there's no structure supporting it, you're probably going to have a bad time, especially if there's trends or if there is, let's say, a lot of volatility. It's going to kind of break your account in a bit. At no point here was there any sort of significant sign that price wanted to go higher. Perhaps here for sure, right? Price did a stop rate. Price that started displacing. It even took out this high. You could definitely at this point you could think, okay, 1 minute time frame is telling me that price might go higher from here, for sure. What about 5 minute time frame at that very instance? 5 minute time frame took out a low, hit a 5 minute fair value gap. Okay, so now at this area for sure, you have structure, you have the time frame starting to confluence together to potentially give you that expansion to your bias. This is one of those scenarios where I'd say if you slapped with a limit order, it's just one of the scenarios where you happen to be wrong. And that's why it's so important to size correctly, because you want to be able to survive when you're wrong. You want to be able to be fine when you're wrong. So I would have probably taken this, not with a limit, but if I had a limit, I would have probably taken it here, got stopped out immediately, and just had to cut it because I was wrong. But let's say, what's a tip for, let's say, when price is doing this like this? It's best to wait for a swing low. At no point did price make a swing low here in this area to go long, so you could have avoided the loss right there. But let's say we got stopped out right there. We just witnessed the only bullish structure that we've been waiting for this entire time become invalidated. Man, that sucks. But again, that gives you the clue there's unfinished business somewhere else. There's no reason for this to become invalidated like that unless price had other plans from the very beginning. Perhaps all of this move up here was simply a manipulation to then start distributing it back down to that 4-hour fair value gap down there. That is why at no point, the only losses that you technically should have taken with your longs, if you were bullish bias, should have been around here if you simply got stopped at around this area on the knife, or around here after price structure developed. But around here, no point did price give you any sort of bullish insight for price to pump higher. 2 stops, an invalidation, it gives you the sign that price wants to go lower first. So you have to detach yourself from what you thought was the draw, because clearly you're wrong twice. If you have the right draw of liquidity, you're not going to be wrong many times unless the price action is just miserable and there's a lot of manipulation. But if you have the right draw of liquidity, you're most often going to have a higher probability of being right than wrong. At this point, this should be your waking call that, okay, we still have bearish structure, bullish structures invalidated. What is the reasoning for this? Oh, might just come back down to this 4-hour busy first before anything else. Then you identify as a setup that matches with it, and in this case, this would be one of the scenarios where you want to flip. You use the invalidation of your setup to flip and go for the opposite direction. Now, I wouldn't have chased it at any point here, but for sure, I was definitely taking something around here for the move down. After that, at this point, then you can start looking for longs again, because it's definitely doable to look for it here. But does it mean you randomly slap for a long? No, you wait for structure to develop if it confluences with your bias to go higher. Or, let's say you really believe price is going up, you can't force it, you gotta wait for this entire sell-off to finish before even bothering to look for longs or trying to catch a potential soup, because you never know if Nasdaq is going to sell off more and more against you. Started along at 330 and got stopped out. Yeah, I see that push right down there. Yeah, that was nasty. This ended up being nasty price action at the end, before the end of the day. Just in the range, accumulating liquidity. So it would have been one of those annoying scenarios for sure. But the insights are just simply, when you identify your draw of liquidity, you want all of the time frames to match together to kind of give you that real confidence that it just seems so obvious that it's going to go to it. For example, the long that we took this morning, all of us together, you know, it was just so obvious that it wanted to go for this high, at least this high right here, that we could enter the trade and just kind of hold it till then and not have to partial. But in other scenarios, it's definitely a lot. If it's conflicting, then you want to keep in mind it's conflicting for a reason. It doesn't mean there's a super high probability it's going to happen. It probably means that there's going to be manipulation around, or maybe unfinished business elsewhere before the move happens. And when it is conflicting, you want to make sure that you can detach yourself and not feel like, oh, this has to happen, or oh, this is definitely going to happen. When it's conflicting, you want to be able to be like, okay, why is this conflicting? Oh, this can happen. Okay, because this can happen, then what? In a scenario like, okay, it can come to the 4 hour busy. If I know it can come to the 4 hour busy first before doing my idea, then I want to make sure that when it starts showing signs that it really wants to go to the 4 hour busy, I'm there to either catch that move or to be out of any positions so that it can do that first before trying to do my idea again. This is a way that you can avoid taking unnecessary losses or being trapped in something that you do not want to be in, as well as potentially chasing for a potential entry. It also helps you, not have to endure the stress of being in let's say a choppy trade or a trade that's going against you and not knowing if you should cut it or not, or if your idea is going to work right after. So this would have definitely be like some tips to help maneuver with that. Any questions? Alright, I'm glad that you guys found it informative. It's pieces like, and of course, like I said, some trades are just going to inevitably be wrong, and that's why it's really important to have right sizing. I would have 100% been fooled by this. If I was trying to chase this move and catch a limit order, this would have definitely caught me here. If I just tried slapping this knife and trying to catch a soup, this would have caught me here. I would have most likely been stopped out in this area right here. This would have trapped me. Would have happened. But I know as well I would have been able to flip right back and immediately go for the 4 hour busy. So if you know nobody's going to be 100% right, that's just something that we all know. You guys have seen me be wrong. That's why sizing is always key, but it's also key to never be married to the bias. You have your bias for sure. That's your direction of where you think price is going to go, but always remember, before it goes there, it can do other things, and you want to be ideally open-minded to the other things that can happen before that and maneuver around it. Exactly. You want to be able to live in the moment and do what it wants to do piece by piece. It's going to reveal clues to you, right? It's going to show you signs that it wants to do a specific thing first before doing other things first. Or for example, the scenario that we actually went short and ended up being break even, right? It took out this buy side. I thought, okay, maybe it wants to retrace deep down first. So if it wants to retrace deep down first, I'm gonna take a short in this BPR. Just try it, give it a shot, right? If I know that there's a chance, then I might as well give it a shot, but manage it correctly. I told you guys the moment it took out the first low, I would put my stop at break even. It took out the first low, I got stopped out at break even. But if this short is not working, why would it not work? Because it has unfinished business. Let me identify what the unfinished business could be. Well, if this is the stop rate and this is the shift and we have a fair value gap right here, oh, we probably want the buy side up here first. Obviously, that could definitely be it. So I strike again, I scaled out here, didn't take out the buy side, stopped out. Happens, right? I even thought about going short again here. I missed it. Whatever. That's the end of my day. But the maneuverability, still keeping in mind your bias, is always going to be important, because price isn't random. It's always in pursuit of something or trying to do something. I need to get better at recognizing a merit to the bias, the emotional feeling of I know where it wants to go, it's hard to overcome. I think there's an element of revenge there too, getting mad at being stopped out when you knew where it wanted to go. Oh, for sure. You guys have seen it. There's been plenty of times where I have the right idea, but I get stopped out early, and then Nasdaq does the move. And I'm just there, staring at it happen, salty, frustrated that it happened. But either way, I don't chase it. I don't try and force the catch of it. I just let it go, because that's ideally, the right move. Not to FOMO into things like that, but also not to let the emotions cloud your judgment and take trades, especially when, let's say, you have your invalidation criteria. Your invalidation criteria is invalidation for a reason. It's what determines for you to just stop. Otherwise, you never really know when to stop, and that's why it's important to know that hard stops exist, soft stop exist. If you're taking a soft stop, that means the setup isn't doing what you want, but it's not invalidated per se. If you take a hard stop, that means straight up, you're done there. That idea is done. You're looking for the next thing. And if you let's say you're looking for longs, you get hard stopped out of longs, and then another long setup appears. Do you just immediately slap into longs? Well, I would recommend no. You want to be a bit more cautious. You want to make sure that bearish structure is actually failing this time to give you that extra confirmation that longs truly want to work this time, because you never know that if it struggled once, it's probably going to struggle again, unless there's more information given that gives you that, oh, it struggled once, but the reason it struggled once was because it wanted to do this first so that it now can do this. So for example, right here, it struggled to, over here, it struggled to go long here because it wanted to make a stop rate first before attempting to go up again, right? So if you went long here and you got stopped out, you want to see information that tells you why you got stopped out, what could be the reasoning for it to go back up again. Not just, oh, bullish setup, immediately snap, because it can definitely go up here. What makes me go crazy is when it goes 2-3 points from DOL and then completely reverse like today, because I keep trying to. Yeah, that's definitely a unfortunate salty scenario to be in. You know, you can't. It's hard, right? That's ideally why you want to have like a trailing to certain areas. Sometimes it becomes real salty as well when your swing low gets taken and then it shoots up because it's an inducement. It's just one of those scenarios that it's good to be mindful of. In this, I guess today was also like it made so many highs but it didn't take them all out, right? There's no way to really know for sure. But in, let's say, JD's case, that's why he targets the bodies. He doesn't target the wicks like I do. He likes to target the body because that's most often what it hits first. So there's different ways that you can maneuver. Like, let's say I'm going to partial majority the moment it takes out the body, but I'm going to partial a little bit more once it takes out the wicks to try and push your way out of doing that. Because that's definitely hard, and I would say even myself, right? You guys have seen I'm like blowing on the screen trying to get Nasdaq to take out the high or to take out a low just so I can get my perfect exit. In particular, I gave myself that adjustment to move slower with you and JD, and for the longest time I couldn't put my finger on it. Then I realized it was the risk management. PA can seem 10 times faster in mini versus too much. Oh, for sure. Your heart, when you're over leveraged or sizing greatly to the point that you can get hurt, you feel the difference. You feel the difference in the thrill and adrenaline and like, oh, I'm staring down the chart, I need this to work. Compared to if you have a small sizing or micro sizing, it's like, alright, well, I'm gonna scroll on my phone while I wait for the trade to happen. I'm gonna see what everyone else is talking about while I wait my trade to go on. Because you don't really, it's not like, you do care obviously, but you're not like emotionally dependent on the result. You're not like emotionally attached to it, like this has to work. It's more of, it can work, it can fail, but regardless, I know what I need to see, and if it doesn't work, then I know there's another trade to make it back. Well, I do scroll on my phone. Any other question, a little info someone wants to ask about? Man. I'd say you want to find 2 good setups and use minis on them. I would use 2 minis. Sometimes I'd be really ballsy with 3, but mostly 2 minis were what passed it for me. So I would use 2 minis. I would find a high quality setup that gave it really good chance to go for the liquidity, and I just take it and hold it I wouldn't scale out. I just take it, and either it takes the liquidity or it stops me out break even, and that's kind of how I passed mine. There are definitely times where you fail and you get that loss, but if you kind of strict them to only like the best kind of expansion that could potentially happen, the possibility it takes out the draw is pretty nice. So I struggled when I was trying to rush it like how I did with Apex, but when I try to just find like a good setup and just hold a good sizing, that's when it was easier for me to pass them. Right. Anyone else has something they'd like to ask? Maybe something to orientate themselves that they feel like they are lacking, or a question related to the draw that we've been going through? I have another today. You had 350 to 450 with a terminus of 500, I think. How do you get to that point? I would have closed at 350 on 20 plus accounts in that heartbeat. It's really, I guess at that point, it's just more of experience, truly. It's repetition of doing the exact same thing every single time until it becomes just natural to you. For me, I had to repeat the process of holding them no matter what happens, because I believe in the draw. It was also, the confidence, right? If you have confidence that, man, I know price is gonna go here, and if I know the price is gonna go here, I need to see certain things happen. If they are happening, just hold it. Do not let go of it until what's supposed to happen fails. So let's say price is expanding towards a buy sign. You know that it's making consistent fair value gaps, retracing to those fair value gaps. What is something you do not want to see? I would hate to see one of those fair value gaps become inversed in a Q3, because that would mean that it could definitely come back against me. So if I know that I would hate to see that, I'm gonna hold the trade till it hits my draw until that exception happens. And let's say that exception does happen. You cut, you scale out, but you trust in your draw with your runners. If the Q3 happens, well, good thing you ended up getting stopped out in your runners for break even and your majority made profit. But if at no point price is not showing you that it's not doing what you want to see, then you gotta just grip it and let price do it. Just have your TP, don't interfere, just let it do its thing. And it's that repetition and seeing how often that works, because of course one thing is just like, oh, it can happen for sure, but if you see it work multiple times, your brain is gonna think it can happen again, it can happen again, it can happen again, so I'm just gonna let it do its thing. So it's definitely an experience thing, but to give yourself that experience, you have to force yourself to do certain things consistently in repetition again and again and again, so that your brain just starts tweaking it to just letting it happen automatically. Right? For me, I've seen so many times price displace all the way to my target that now I hold it. I hold it. If I feel like price is a little bit risky or a little bit tricky here, I scale out, but it's either draw or nothing for me, and you guys have seen it plenty. I get stopped out at break even, sometimes the trade even goes against me, I'm red, but it's either the big hit or a little loss. And that's also the parts of being a risk to reward trader. I'm making sure that every win that I have manages to support 2 losses in a row. And yeah, as well, micros definitely help you do it as well. You want to make sure you have a sizing that doesn't stress you out, doesn't pull out anxiety out of you, because if you're stressed out or anxious trying to hold a trade, you're going to have a bad time. And there's also different types of liquidities, right? There's the low resistance run and the high resistance run. If it's a low resistance run, easy to hold. If it's a high resistance, that's a little bit more tricky, right? You do want to kind of scale out there and manage things well, because you never know if it's just grinding up to do a knife. Yes, constant displacement, like if price is just fast trying to go towards a draw of liquidity. Not necessarily like a slingshot move, right? Those are, I would say, if you see like a slingshot move, that doesn't necessarily mean that it's gonna be high probable. That's more of like, it could be perceived as manipulation. In my opinion, mostly it's more manipulation, and that's why when I see a slingshot move happen in my let's say my trade, I'm already scaling out because I don't know if it's gonna do a whiplash right back up. So for me, when it flushes, when it does like a slingshot, like a big move that doesn't have any retracement, it's to be a bit more cautious. But ideally, you want it to be healthy. Healthy displacement, retracement, displacement, retracement, displacement, retracement. That's the ones that are easy to hold and that you can hold with relative conviction. If you get the mix of displacement, a little bit of grind, displacement, retracement, displacement, a little bit of grind, displacement, that's not necessarily bad either. But if you're getting pure grind, it can be tricky because there could definitely be like, yes, it wants to go up, but to what purpose? Is this grind up just a retracement to the knife? Possibly. So this is a little bit more of a context thing. Depends on the context of the trade, of all of the data that you have going on to see how much you can hold from that one. Anything else? I think we kind of ran through all of the subjects of today. I'll leave you guys with an anecdote though. I think price is going for this buy side right here. Why? Because it hit the 4 hour. Oh, it hit the 4 hour busy. It made 15-minute structure to support the push up. It made a 5-minute model to support the move up. And right here we have some nice standing liquidity. So we have high time frame, mid time frame telling us long. 1 minute time frame is a grind up. Just what we were talking about a minute ago. We don't really have any PE race in the 1 minute time frame either. So, although I think price can go up here, there's nothing in the 1 minute time frame that's telling me to be in for it to shoot up just yet. Perhaps I would feel more confident to go long if I could see this be properly inversed, because then I'd have justification in 1 minute to go long. Yeah, if you went long, like let's say in this BPR right here, good stuff, Logan. OMT MSO. But if you're trying to go long up here, my thoughts play out. Now look at you guys, you already know what to do. You guys already long. Good stuff. Reminded us in stream, if you don't understand what it's going to do next, then don't get involved. Help me staying away. Yeah, for sure. Like I say, some of you guys are experienced enough, and eventually the others that are not experienced enough, when you get to that point, you're going to be able to look at a chart and in like a minute or 2 minutes be able to easily tell what it wants to do and how it's going to do it. If you look at a chart and you don't know why it's doing what it's doing, and you don't know how it's going to do what you want it to do, then that's just a sign to stay away. It's like, for example, when looking back at the drop, right? If you have a bullish bias, you know what price wants to do. But if it's not doing anything of that, if it's not doing a 5-minute structure, a 1-minute model, then just stay away. Because the probability of your idea working out decreases, obviously. That's a great question, Logan. That is a great question. I don't think. I think really, if you wanted to go for the actual source, ICT himself, the 2022 mentorship is truly everything you need. Even the 2016 one, I don't really think about anymore, because the 2022 model or the 2022 mentorship gives you the 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 essence of what you need to read price and where it wants to go. But everything that really made me how successful as I am today was psychology and discipline. Because I became profit, like Slippy knows. Slippy's an OG. He remembers when I had my own server and I was streaming all the time by myself. He, I didn't change the way that I trade. I still traded the same exact way, but Slippy knew me when I was getting my ass kicked often and I wasn't very profitable. So I wouldn't say that ICT offers content that would make you profitable. I'd say he gives you a technique that can, help you reprice, help you have a system, because it all starts with a system. But I wouldn't say that he gives you the key to being profitable, because there's like a running joke that a lot of traders have. The running joke is that ICT traders are not profitable, and that's true, because they focus so much in price action that they do not focus on themselves and what they need to master themselves to be profitable. So I would say that if you want to revisit something, if you feel like at least your system is weak, if you feel like your price reading is weak and your TA is weak, yeah, study the 2022 mentorship. But if you feel that you have a proper system, your price reading is not weak, and you know how to read the market, then focus more on fixing your mistakes, your bad habits, and improving yourself. Because that's where the real growth happens. For me, it took like fucking 4 years of jumping between stuff and learning ICT, but that's not what made me profitable at all. And that's why I kind of pushed myself away from ICT. Because in the end, I feel like the biggest difference was simply myself. It was not that man ranting for hours, non-stop, about Vinny. Oh my god, about Vinny every single day. But yeah, that would be my final 2 cents on it. Any last questions? That's great that you have that. In fact, if anyone wants to watch the 2022 mentorship, you should watch a remix version without the rants. Yeah. Alright, fellas. I hope this class has been insightful, has assisted you with some issues that you may have with draws of liquidity, or trying to separate yourself with the bias that you have, or trying to maneuver around the bias that you have. Because sometimes a big mistake that happens, at least to me, one of my weaknesses when it comes, like one of the reasons I'm wrong, is mostly because I'm early into the move, and then I get stopped out, and I think I'm invalidated, and then the move happens. It's just one of those things that, you kind of do have to adapt to and maneuver around. Like this week, I think the beginning of all of our trades this week starts off with us having to flip and then us being right. Except today. Today was different. But it does kind of start like that. because price action often is rough or just tries to trick you around. So playing against your bias isn't necessarily wrong. But with all of that being said, I will see you guys tomorrow. I hope you have a lovely rest of your night. And alright. Yeah, Cryptic, you gotta hold for your trades. You can't keep risking full size loss and only exiting for small wins. Or that's not positive expectancy of you. Good night, guys. Have a good one.